I think it's Newton's law, maybe the second or the third, that what goes up has to come down. I wasn't very good at science, hence the career in journalism. But I think that's exactly what's happening here in this market. You are seeing an exponential rise. This isn't your constant kind of grind higher that you've seen in past decades. This is ultimately almost kind of a stock chart that's going basically vertical. And that is where a lot of people are starting to get nervous. But before I came on here, I did look up the year-to-date performance of the S&P 500. We're at 16.5% year-to-date. So a 10% drawdown would give us, again, rough math. This isn't exactly how the math works, but still an almost 7% gain when you look at the S&P 500, which actually has beaten previous years of index performance. So that's, I think, kind of the tone that a lot of these executives are taking, which is that, yes, there's a lot of momentum. Yes, there's a lot of excitement. Not all of it is backed up by the fundamentals because so much of it is based on growth they're going to see in 5, 10, maybe 15 years. And then, of course, you never know what happens in that longer time frame. And for that reason, because so much of it is pegged to speculation, is pegged to expected growth, you could see some sort of crash down to reality. But again, they've all kind of cushioned all of their statements by saying that even that crash down wouldn't be the worst thing.
Palantir is an interesting example in the question of tech valuations as well, and whether or not they are stretched, because the results are, on the face of it, extremely strong. But as you say, investors still wondering about the outlook down the line. It's
a really fascinating one because Palantir is ultimately a data service company. It does data software. And one of the real key reasons that it became such an AI kind of popular stock is because a lot of the defense contracts from the U.S. government started utilizing Palantir's data services. So not only did it become a technology company, ultimately an AI company, because they were investing heavily in those as well, it had kind of the stamp of approval from the U.S. government, which if you look at other contractors that the U.S. government uses, like Lockheed Martin, for example, or Boeing, when they had more exposure to those federal contracts, you do start to see this kind of inbuilt premium of it being viewed as kind of a safe stock because so much of their revenue comes from those federal contracts. I think what's really interesting here, and you can see this in these numbers, their bookings are actually up. Their sales numbers are up. Their profit is up. On the surface, everything looks great. But this is where the classic kind of adage of Wall Street comes in, where you buy the rumor, sell the news. And that's kind of what's happening here. To your point, Stephen, about valuations, this idea that so much of this is baked into this market that when you actually see that come to fruition, when you see those numbers actually show up, everyone kind of says, okay, well, that's exactly what we expected. Let's take some money off the table now because now we don't know what happens next. You're not just seeing it in the Palantir space. You're seeing this in defense stocks in Europe as well because so many people have priced in this massive momentum tied to government contracts with the mix of AI. And then when you actually start to see and value it on the multiples that it's trading at, you say, wait a second, maybe it needs to come down a little.
Well, also, does it help or hinder when the CEO is, as he always is, typically bullish? This is Alex Karp of Palantir saying these are arguably the best results that any software company has ever delivered. Yeah. I mean, if people are worried about valuations, you can make that argument. Does it help or hinder? Look, just lastly, though, there are still loads of big deals happening. Alphabet and Meta have also conducted big bond sales recently. Is there still big demand from investors on the debt side?
There absolutely is. I think where maybe tech companies are getting punished in the equity market, they're getting rewarded in the bond market, excuse me. I think this is really crucial here because in the equity market, and again, what happens in the equity market affects the bond market. It kind of changes the valuation and the issuance and the rates that you can offer in the bond market as well. But think about it. A lot of credit investors have been lacking a forum in which to get involved in the AI trade as a bond market investor. So this is kind of the dynamic that a lot of companies are taking a bet on. You saw it with Oracle and the massive, I think, over $30 billion issuance they did in the States. I think what's interesting in the last 24 hours is that Alphabet came in and they did a double debt sale. They did it in the United States in dollars and then $3 billion in euros as well, which tells you that this capital markets deal activity boom you're seeing is not just an American phenomenon. It is actually bleeding into Europe. And I think that's really crucial. Not only are they coming to market, their oversubscribed deals. People want in on this trade in the bond market.